Hi, good evening. My name is Manda, the mortgage coach, and today I'm joined with Yusuf from Dukes Meadows, and we're going to be talking about some current events, mortgages, and more, really. So, thanks for joining us today.
Thank you
And
for inviting me.
I mean, I think we should really start off with we've been talking a lot behind the scenes of what's going on in the mortgage market and some of the new things that have been popping up within the industry. What sort of jumps to mind initially when I kind of say to you, what's new?
Yeah, and I think it's a very good point in that it's very pertinent for a lot of first-time buyers to understand that the banks are reactive to what's happening with the markets. If that's about residential property prices, or if that's about earnings, if that's about circumstances, then the banks are being reactive because one of the primary drivers for the banks is to enable first-time buyers to get onto the property ladder. And therefore, there's constant monitoring over what sort of conditions are out there for people to be faced with. And one of the biggest areas, I think, which has been around in the market for a little while, is the house prices and how they seem to be getting wider and wider, the gap between the earnings and the wage inflation and how the house price inflation, that gap seems to be widening. So the banks have been reactive to say, well, how do we help, even still in these circumstances, how do we help first-time buyers get onto that property ladder? So there's a lot of initiatives that come out from banks constantly, that we find. We get updates or as soon as there are the changes within the bank's criteria, the circumstances in terms of the reaction to the market, they'll inform us, and then it's up to us to try and match the types of clients that we have with the types of mortgages that are out there. One of the initiatives, for example, and I think this has happened a lot more in the last sort of 12 to 18 months, where the accrual of a deposit has become quite the main point for a lot of people out there. Okay, well, I've been renting for years, but again, with inflation, with the cost of living. How am I supposed to be able to save for a sizable deposit so that I can be able to buy the property in the area that I'm living in for my particular workplace and so on? So banks have, by and large, looked to address that issue, and now we see there are a lot of there are a few more players within this space of low deposits to no deposits. There are a handful of lenders that will say you don't necessarily need to have a deposit to be able to get onto the property ladder. There are some that are coming on 2%. There are some that are coming on 5%. And we did a big campaign on £5,000 would be enough for a deposit to be able to get people on the property ladder. So what we're tending to see is the trends within the banks are reflecting the market trends related to property purchases.
Yeah, no, thanks for that. I mean, you've covered a lot in a very short space of time. I just want to sort of recap on a couple of things. So initially, you obviously said how banks are really looking at the first time buyers, and a lot of first time buyers ask me why are banks so interested in us? And the best way I can explain it is they really are the foundation of the whole of the property industry. If we didn't have first time buyers, then, the home movers who are moving from flats to houses or from houses to bigger houses or even from houses onto maybe smaller downsizing wouldn't be able to carry on that property chain because first time buyers don't exist. That's the first thing. The other thing is there's a lot of people in the sort of 30, 50, 40 income brackets that don't seem to realize that these, especially the 5K deposit mortgage, is really for them. at the end of the day, we are looking at property prices of 300,000 with a 295k mortgage. You have to kind of be in a certain bracket in order to be able to afford those. We have got a lot of inquiries with some of the lower earners who are thinking, okay, I don't earn very much, so I can jump on one of these lower deposit ones. But unfortunately, well, it depends the area you live, but with us both being London based, a lot of our clients are from London. And I think, the point I'd love to get across today is that if you are earning 30, 40, 50 income, you're the ideal people for these mortgages. Don't kind of, I think you've got the lower earners hoping for the best, and then you've got the medium earners thinking, I can't quite reach this, but I'm not low enough for this. So they're kind of just kind of waiting. So I think there is a lot out there. And you also mentioned renters' prison. There's so many people renting. Now, if you're renting in London, sometimes it can be 1,400, sometimes it can be 2,000, 3,000. At the end of the day, as long as you've been renting for 12 months, you can get a 100% mortgage. And for that reason, again, if your income is in that 30, 40, 50, 60 bracket, then you are the ideal candidates for that. If you're earning more, then obviously there's the professional mortgage, which I'm sure we'll go to talk on later.
Yeah, no, it's just and you bring up another great point there is there are some people in their 30s, 40s, 50s who are looking to be first-time buyers, but then there are also some people in that possibly 40, 50, 60s bracket that have all this equity that's also tied up in their properties. And it's about how you're shifting the cash around to be able to support those around you when they're looking to make a purchase. Because if you're a home mover, for example, or you've bought a property, say some 20 years ago, the market at that particular time is very, very different to the landscape that's facing a lot of first-time buyers now. So that's what we're talking about, those trends that are shifting and how the mindset of buyers can also turn as well as the banks and is matching those two things together. If 20 years ago the deposit requirements was a greater need because maybe the house prices weren't that much and you focused a lot more on getting a deposit, perhaps now it's about, well, okay, the deposit isn't there, but my earnings are pretty decent. Like my man says, 40K, 50K, there are banks doing 6.5 times, 5.5 times in those sorts of categories. So the idea is, yes, you're starting off with perhaps pushing quite the limit on the borrowing against your income. But as time wears on and you reduce the amortization, whereas you're reducing the actual loan amount, the ease will creep in as well because you're paying down that much more. So it is about how the market is responding to that, and the landscape keeps changing. And then you will have lots of people who said, "Oh yeah, I've spoken to so and so who bought 15, 20 years ago," and you can get some useful advice. Don't get me wrong, you can get some useful advice from people who've been through the process, but the landscape is constantly changing. And even if we reflect on the last 5 years, you could say how things have shifted. I mean, Help to Buy was around and that was quite a popular sort of scheme about 5 years ago. Gone, disappeared. So then people are looking at what's the next sort of areas available, while the market and people who are looking to get onto the property ladder, first time buyers are making those sorts of thoughts processes on how they can acquire their first property. The banks and so on are also doing that, and also mortgage advisors. We're in a position where we have to keep constantly up to date with lots of information. We spoke about it as well. We had a lot of inquiries about where there was a joint borrower sole proprietor. I know that's a particular favorite of yours, and then that a new deal came into the market where it was a joint borrower sole proprietor with no deposit, and that was a first in the that came out. I think that was only about 4 to 6 weeks ago. Constant change, and everybody has to keep up to date with that. But it's certainly it's good that we can keep on our toes to be able to understand what's happening there, and then, like I said, connecting the clients' sort of needs and requirements to what the banks can offer out there.
Yeah, you're right. It really is about finding that mortgage solution. But what I find with, as particularly like the joint borrower sole proprietor with 100% mortgage needing no deposit, I think people, and correct me if I'm wrong, but I don't think they're quite getting it. And this is why there's a lower demand than we would think. You know, a lot of people are like, okay, I've got the affordability, but I haven't got the deposit, or I've got the deposit, but I haven't got the affordability. When you're lacking on both, you've kind of already given up. So then when you hear about this product, you kind of think, oh, it's a bit too good to be true. So for that reason, I think people have been less inclined. It's funny because with the renters, there's been a lot of interest, but it's again the thing I'd say most importantly with the renters is you need a decent income. You need when they created the renters mortgage, it was for a specific person in mind, someone who is paying very high rent, so can't afford a deposit, but also has a high income, has really decent credit. They just have got, as my optician always says to me, they're a rent in rent prison. But you get into that habit of, you know, he manages his shop, so he obviously earns really good money. But once you start renting, you get into that habit. It takes up maybe a third or half of your income every single month. You've never got that opportunity to save a deposit. So this is why they created the renters. Unfortunately, a lot of people who've made inquiries are more of the low income. And when we've gone through the calculator, it hasn't matched up because the maximum purchase price for the renters is 600,000. So you need to be on the 50K plus, I'll be honest, in order for you to afford it. And then that isn't the only piece of the puzzle when it comes to affordability. You need to be low on your credit commitments. You need to be low on your, you can't have too many kids, unfortunately. Your financial dependence need to be low, but all of that needs to be taken into consideration. So I think this is the reason why Yusuf and I are on here, because we just want to sort of educate people more. And we found doing the TikToks and things like that, there's just not enough time. So this is our opportunity to slow it down and go into more detail. And we'd love, you to put your comments in under the video, and then we can obviously address those individually. But I think the key thing is, and I think Yusuf would agree with me, is there's so many different things changing, so many much different criteria. It is all about having that conversation, booking an appointment, and us understanding your circumstances. And as we like to joke around and say, we're the mortgage matchmakers because we like to find that mortgage solution. Everybody is unique. There are so many different mortgage products out there. Us as independent mortgage advisors have access to the majority of them. So we can really find what works for you. So it's all very well talking to people that even bought 6 months ago, and they may be. And I had this conversation with a client last summer, and she's just like, well, my best friend and her boyfriend, and earn roughly what me and my boyfriend earn. I don't understand why it's not the same. And unfortunately, everybody's circumstances is different. No one is unique. So you need to sort of have someone that can navigate all that, which is the whole point of a mortgage advisor, really. This is why I get a little bit frustrated when people just go direct to their bank. It doesn't fit and they give up. There's so many different solutions out there. You just need someone who's willing to sort of sit down, spend the time, talk to you, understand what your issues are, and then match it. What would you
Yeah,
say to that,
exactly.
use?
Yeah, no, exactly. Because you think the first door that closes, you think that's it, because and you think that's how that particular sort of sphere of works. But it's not like that at all. I mean, we have such a plethora of lenders and banks that we can look to go through. And while you're mentioning an anecdotal story, I don't want to throw a couple in myself. Got one particular client now that I'm having to do a remortgage on their second residential. And there are so many nuances to it about being a day rate contractor and having some of the commitments in the background, trying to find the lenders, and I've gone through about 12 or 15 different lenders to see where that can get all of those bits and pieces to fit together for the ideal solution. Mortgage matchmakers, absolutely. But that's what our bread and butter. That's the process that we have to go through. You have one door that closes. For us, that's just like, all right, cool, super. That's that one done. Let me go on to the next one, next one, next one, next one. And I've spent today in particular actually helping out this client, and I've gone through the 12 to 15 different lenders for to find a solution for him. And the other one I was going to say is that yes, like Man's mentioned about the renter's mortgage, it might be a little bit blinkered into a particular type of client that they're looking for or have set up this mortgage. Right? And it might suit your circumstances if your income is good and your track record of payments is good and your credit commitments and so on. So yes, there is that. But I, the meeting I had with a client was that they presented themselves with a situation where the previous year they had a self-employed client. Previous year the earnings were not as good because of sort of some sort of a medical issue. But sorry, that's the previous to the last year. But the latest returns were really quite healthy and reflective of her business. And so we went through the meeting to discuss what sort of options she'd have, and she had a particular property in mind with a healthy deposit, but also she wanted to make ends meet. So I know of a couple of lenders that will use, for example, the latest year's sort of tax returns for affordability, and we've got it, and we've got the ideal lender for that particular client. So sometimes you might be in a position where you can just chase the rate and say, well, yeah, I can meet 4.5 times income for a lot of lenders. I've got a 25% deposit, and my circumstances are quite vanilla. And so you can chase the rate. But in other circumstances, it's about finding the perfect match for yourselves. And like I say, these two cases where we're talking about a second residential for a client, and in this particular one, we were looking to just utilize the latest tax returns because it was more reflective of how the business is. Because if you look at the third year's tax returns, it reflected the latest tax return. There was 1 year's blip in between. So why be penalized for that? But this is where we come in and have that discussion. And if we weren't able to find the solution for her, we were looking to go down to a joint borrower sole proprietor, where we'd include mum into that position as well. But it turns out that she was able to and she's just made an offer on a property, which we hopefully will get accepted.
No, that's great use. It's actually made something else pop into my head. We didn't discuss that we'd be talking about this today, but I'm going to throw you in the deep end anyway. But I
Mhm.
just think, when you are self-employed, having income protection is so important because when you have blips like that, you still need to pay your mortgage. Don't you think?
It's a great point. And I have just been asked this from a bank when they have said, okay, super, we're doing a joint borrower sole proprietor mortgage in actual fact. And the bank asked me directly, what will happen when the second applicant is not working? How is this mortgage going to be supported? And it's exactly that. And I've had the discussion with the client to say, if you're going to have income protection in place, it's going to be able to prop up your mortgage, which is a big, big concern for the lenders and the banks. And I'm so glad you brought that up because a lender has asked me directly during the course of the application, what is going to be the provisions in place? And if we can turn around and say, listen, we've already had the discussion on income protection, as well as obviously life insurance, which is a key one, but having income protection also in place will reassure the banks to say, look, typically when we go in for a mortgage application, we're talking about the circumstances, we're talking about the picture right now and say, this is how much you earn, this is how long you've been doing it for, these are your outgoings, and this is what's coming in. Brilliant. But it's a snapshot in a window of where things are now. But essentially, the bank is saying, we're going to give you a mortgage for the next 25, 30, 35 years. Where are some of the reassurances for us? And income protection is a great one for that one. I'm so glad you mentioned it because that's where you can then, not just for the banks and to appease their sort of requirements, but it's for yourself. It's protection, right? So protection makes you feel safe. And you're saying to yourself, well, okay, there could be circumstances within the next 25, 30, 35 years, which is very feasible because that's a long period of time, where I might be in a position where I can't earn the money that I need to earn to be able to maintain these mortgage payments. What do I do in that circumstance? income protection is a great sort of a comfort there in terms of that. And the other thing that I think especially people of our generation, Mans, because we're only in our 20s, possibly 30s, maybe a little bit older. But anyway, I think people in our circumstances, there is a little bit of sort of a misconception about how protection works around these areas, whether they actually pay out and stuff like that. But you are get messages from providers saying, "Oh, in the previous year, we paid out on 98% of the claims that were coming through on
That's
things like
good.
that." So it's a very different animal to what you might have as a preconception, but also in terms of what they really set out. These providers out there are set out to do, which is to help you stay in your home once you have acquired it through a mortgage. So it's a great point. Thank you for bringing that one up.
Yeah, the other thing is, and this reminds me of another story, and maybe a good way of doing it is this talking about previous clients, and then if anyone relates to them and wants to have conversations with us again, just put in the comments, and we will get in touch with you. Now, basically, there was a mother, and she works for the NHS, and her daughter works for the police. Now, we had a clear path for the daughter within the next 5 years. She would be detective, which means her income would, quadruple. But for now, she wanted to buy her own place. And so basically, we did a joint borrow sole proprietor. But what her mother said on a separate call, she didn't want to say it in front of her daughter, is she worries about her daughter every day being in the line of fire. And if something happened to her daughter, even though on paper, with the affordability, they can jointly afford the property, she is not actually going to be paying the mortgage day in, day out. Her daughter would be. Now, if something happens to her daughter, what then happens with the mortgage? She said, for me to, I know the ideal thing would be to sell the property and pay off the mortgage and everything like that. She said, but obviously those kind of things can take time. I'll obviously be not be in the mental state to start doing viewings and and all of that lot, and then there's probate, and we've both been through that kind of thing, so we know what a lengthy process that can be. So she insisted on making sure, and it's funny because she's the older applicant, but she insisted that her daughter get life insurance. And it was, she told me, we had the conversation, then I had to sort of broach it with her daughter because she just didn't want to say to her daughter, I worry about that happening to you with you being, a police officer. But that's something else to be aware of, especially when it is a joint borrow sole proprietor. Having that in place really did help with the mortgage application.
Yeah. It's such a good point. It's not the easiest subject. It really isn't. And sometimes you have to have the difficult conversations just so that you know that you're covering all the bases. And this is one of them. Life insurance is definitely one of them. Another client of mine has gone through a bone marrow transplant. And so, it's just and then they're young. They're in their 30s. So it's just these sort of things that happen in life. And that's what the providers have done, is that they've looked at it and said, typically over the lifespan of a mortgage, so 20, 30, up to a max, say 40 years, what are the circumstances that people typically find themselves in? And they will try and provide for that. So, for example, there's something also called critical illness. Income protection, for example, is also covered within the sort of the conditions of critical illness. What are the areas where you might need to make a claim are listed there. And there's, for some of the providers, it's more than 140 types of conditions that are on there. Obviously, your big C's in your heart and heart conditions and so on and so forth are within that. So they look at these things and they think, well, if these are the sort of conditions and so on that, life circumstances will be, you'll be faced with, then we need to help you protect yourselves against that situation. And exactly like you say with the police officer and so on, it's not easy conversations, but it is a necessary conversation. It's a shame that life insurance, critical illness, income protection aren't sort of permanent things, or you have to have them in place. They are optional, but have the discussion to understand where they fit in for your mortgage acquisition. It's the biggest asset that you're likely to look to acquire. So within that, if you go out there and you get pet insurance, important because those things can be quite expensive, and you're getting your car insurance. Yeah, these things are important.
Yeah,
But then so
and
would it
building
be,
insurance is mandatory, but you have
yes,
to pay the
correct.
mortgage on the property. So,
This is it. And I've always said, like, a mortgage, like, and the mortgages that we secure help you get your foot in through the door. But the protection and the insurance allows you to stay in the home because of, like man says, whether it's, a life insurance because suddenly you're faced with this enormous debt on the loss of someone, or you've got a critical illness and you can't, afford to the mortgage payments. These things are going to keep you within your home as well. Because what you have to bear in mind is also banks they hate the repossession situations, right? So again, their whole sort of remit is to make sure that they can get you a home and you hopefully stay in the home. The protection is again another layer of safety for you to make sure that you can maintain staying within your home.
yeah, no, that's great. And unfortunately, we are out of time. But I just want to say thank you so much. And yeah, did you have any
Absolutely.
last things you wanted to say?
Only a little comment on how to. It felt so comfortable just having this conversation. It's really really nice and it's critical. And like Man said right at the top there, the idea is that we can look to help people, with their queries and doubts and the whole kind of transaction itself from start to finish isn't always the easiest. There's a lot, especially a first time buyer. You've never been through the process before. But people like myself and Mans are here to be able to help people, shed as much light as possible on the journey.
Okay, well, thanks everyone. And remember, just put in the comments if you'd like us to get in touch and we'll provide a Calendly link and you can book an appointment. So thank you.